Hi, Warriors. Who said Turnaround Tuesday was canceled? Oh, yeah, I did.
I was going to say you did.
Yeah, yeah, I did. It sure wasn't. Nameka on Duaka, welcome to F.A.C.E. First time I've seen your name. Sinatra, Michael Wiseman. Hiya, Brand. Thanks for being the Herald. And Brand, how are you? Ryan, Richard, Laura, Paul. Okay. So the pound negated its breakout, its failure, head and shoulders failure yesterday. I got out of the way, and that's what you're supposed to do. I haven't done anything new there, but gosh, I don't know. I think we should start with the yen. That was a hell of a move yesterday. Didn't quite get to 48. And earlier in the week, I was talking about how the 10-year yields looked like they had peaked. Definitely seeing that happen. The bonds continue to gain some ground. So the picture is changing in yields. So let's start off with Ryan. Did that surprise you, the big break we had in yen? You get on top of it in time? I didn't react in time. How about you?
No, I went the other way. I started picking up small on the dip after the data, but I got knocked out on below 146 on that one. But yeah, big, end of month meets data. Yeah. It was rallying through 147 on end of month flows, and then we get big bit of data out and wallop.
Yeah.
So I got it in the face for that one.
Okay.
But, yeah, I mean, I wasn't going to short it up there while it was moving like that, because if the data had been much better, it would have been through 148. It's 149. Yeah. So you've got to.
What about now? Are you looking to sell rallies in this against the high that we made yesterday?
Not 5 minutes before the ADP, no. But
no, I mean, you have a level.
I think it's difficult because dollar yen's been so strong, irrespective of end of month. So, if we get into some of the high numbers up towards those 150s, I might have a little look at it. But already we're holding that 146.50 again, as we were pretty much before coming into this week. We were holding the 150s area, 146.50s, and we're holding it again. So that shows you that perhaps the end of month flows have largely been done, and now we're back in the wait to see what the data does. And again, ADP now, if it comes in 300, we're at 147. If it comes up 50k, we're down at 146 or worse. So it's light switch stuff, and you can't really take a side at the moment.
And NFP Friday.
Yeah, an NFP Friday, and PCE, and GDP, and.
Yeah, in these thin market conditions, you think it's even possible, because we did this in a real kind of off week where, big money can really move the markets around, that we could even attack these highs? I think I heard you say that we could still see 148.
Yeah, as I say, we get 300k on ADP in 5 minutes, and we'll probably be up there again. But now we've got a marker. If it can't break that high on good data, now you're thinking, right, well, that's where some sellers are sitting. Then you get a bit of conviction to maybe scalp a few up the top there.
Okay, so pound wise, we do have a pivot. So on the pullback, it held the neckline heading up. I'm kind of thinking that there's a shot towards 128 or so in cable in the coming days, maybe
Could
29.
Could be. We can't hold below that 126, can we?
Yeah. No, I mean, I was as patient as I can be, sitting for days waiting for this. Again, the too many attempts, but I wasn't going to anticipate that it was going to be a false breakdown until it was on this candle. Okay, so pound looks better than euro. I think the easiest short coming up is going to be if we get a rally towards 66 in Aussie. because I think this is just a correction in the dollar. We're back under the breakout there too at 103.50. So I did draw some fibs on the whole dollar rally. So
Yeah, I mean,
38%. Go
I'm
ahead.
sorry to interrupt.
That's all right.
This is some really big confluence right here. I mean, because this was like the 103.50 breakout point too.
Right,
It's a
that's
lot of support here. If it
It's
breaks, it's
underneath
going to
it.
be ugly.
Yeah, it's a little bit underneath it now. But Blake, wouldn't you consider this move, give it the benefit of the doubt, like we talked about earlier in the week, that if we pull back towards, 102.5 or 103, that the dollar would be a buy for another wave to the upside?
I don't know. I think it depends on the data, because what I think and what I suspect is happening is that we're going to start to see not only U.S. data, probably globally, but I think U.S. data is really going to start to weaken from here as we head into the fall.
Yeah.
So, it just depends. I mean, if the jobs data comes in and let's say we come in with instead of creating 200,000 jobs, we don't create any jobs, or maybe even lose some jobs. If that's the case, I'm going to have a really difficult time playing the dollar on the long side over the next month. Just having that sitting in the back of my mind, thinking and, knowing that, things are probably going to get worse as we head into fall. So I don't know. It's a tough call. It's a tough call to make right now.
Yeah.
I guess, if we got to 102, as you're pointing out, what does the world look like at that moment?
Yeah.
If we're seeing stocks kind of, go tits up a little bit and, falling flat on its back, I mean, maybe you're buying the dollar just from a risk aversion point of view. I don't know. It's hard
Okay.
to tell.
So we talked about the S&P recovering to 4,500 a day or two before it did it. So
Yeah.
here we are. It's testing the underside of the trend line that it broke, and I'm looking for shorts up here. I have a new short candidate in the mega tech, and here's my case. All right, it's Amazon. All right, so I'm looking to sell a rally into next week. I don't think we'll make new highs.
Is that your
But
50 DMA in green?
Yeah.
Oh, that's the level, right? That we break that
Yeah.
in.
Yeah, I'm figuring the ABC, the market rallies into next week possibility. But the main reason is not on the daily. The main reason is on the weekly. All right, so you look at something like Apple, okay? New all-time highs, right? You look at Microsoft, new all-time highs. You look at Amazon, and it could just be, it looks more like a correction, and it hasn't even taken out its August highs, when in August, where were the S&Ps? They were here, back here. So you had 4,200 on the S&Ps, and Amazon, and it's, traded to 46, where Amazon is struggling against the same time zone. So I'm thinking, at least back to 100, and maybe even new lows if we, if it turns into something more than a correction. But, it's a classic study in relative strength. I still am bearish Apple. I think it's a correction to sell. They're starting to get their hype on their iPhone day coming up in mid-September. But to me, this still looks like a bear market rally. I don't think we'll fill the gap before we have another leg down. So, but I just wanted to point out that this is a classic trade selection on relative strength. Amazon did not do what the rest of the mega caps did during the parabolic move to the upside, and I rest my case. So Jeff Bezos, you don't care where the stock goes anymore. Isn't that nice? Isn't that nice? He doesn't have to care anymore. Which yacht should I get on today? And which private jet should I fly to that marina? So
hey, can I say something about Jeff Bezos? I mean,
yeah, you
the
can.
guy's a freaking stud. I mean, yeah, dude, he built an online bookstore from his house.
Yeah, it's amazing.
And I mean, and people harass him like, oh, he's on a yacht and he's got a young wife, and dude, the guy's living his best life. I mean, the guy's a stud.
All right.
He is.
All
Good luck to him.
Whether you like him or not, you gotta respect.
Well, I'm just
you gotta
saying, I
respect
think
the player there.
he's
So
pretty divested of Amazon now.
hey, they've brought
They
us
bring
they brought us a really great service. Unfortunately, they're going to be raking us consumers over the coals right now. You can see how
why?
they're
What are they
changing.
doing?
Well, you have to order at least $25 worth of stuff to get free delivery for some Prime
see.
members. $35 for some stuff to get free delivery. If you're not a Prime
Okay.
member, you're absolutely screwed. I mean, it's you can see they're going to start.
Well, thanks
squeezing
for giving
consumers.
me. I only had a technical argument for it, so thank you for giving me the fundies on it.
But
I needed that. So
no, I hate to. I'm gonna. Do you mind if I jump in? here a
no,
little
go
bit?
ahead.
And,
You
and
know,
by the
Blake,
way,
Yeah,
you
4
could-
minutes.
oh yeah, we got just a few minutes, and that's
Oh,
why I wanted
gosh.
to jump in. I wanted to get
I came
really,
in. I
want to
didn't
get
forget.
K-Man's take because we haven't heard him this morning. And also Ryan, really quick before the data comes out, what do you guys think about the Eurozone CPI? Mike made a observation, says Eurozone's much tougher spot than the US, which I don't disagree. But K-Man, what are your thoughts about the inflation data that came in out of Spain overnight?
Out of Germany, out of Spain.
Or Germany, I'm sorry. Well,
Sticky.
Spain, we have Spanish too, right?
Sticky. I think we are going to see base effects waning, but it's gonna be for the coming months. It's sticky, man. It's not coming down. But there's the only thing I can say about it, really. And for the US, I think we need to look at the combination of what we saw yesterday, the ADP today, then the PCE tomorrow, and then the NFPs on Friday, and then we may really have a decent bias going into September. But before that happens, personally, I'm not going to even try.
Got it. All right. Well, Ryan, do you have any thoughts about the inflation data? I know you guys were on the Flow show overnight. By the way, if you guys and gals are awake in European, Asian hours and you're not listening to the Flow show, make sure you do that. I mean, all you have to do is go to our website and go to where it says webinars, and then you can see the Flow show right here, hosted by Ryan and K-Man. Make sure you're listening in every day. All right. Sorry. Ryan,
If you don't go to that show, you're not in the flow.
Ah, there you go,
Exactly.
Dale.
Exactly.
All right, Ryan, what are your thoughts?
Yeah, exactly as Kay says, it's sticky. Spain inflation went up. Germany's not coming down as much now. We'll see the pan Eurozone number, I think, later this week in the other countries. So yeah, we're in sticky territory, and we've seen that in the US. So maybe a bit of a pattern developing.
Okay, yeah, and German CPI. I'm sorry, I didn't even see that came in. I was wondering what you're referencing. It came in as the show started this morning, and it came in a little hotter than expected as well. So, yeah, it's sticky, but it's sticky globally, right? I mean, it's not just a German, Spanish problem. It's a world problem. It's a global problem. And I don't know if Stelios is here. Sometimes he's here, sometimes he's not. It just depends on his schedule. I know he had his brother in town and whatnot, but Stelios has been arguing that we're going to be seeing, deflationary data. Oops, I'm sorry. We're almost up speaking of data. But I'd love to hear his take, but he's not here this morning. ADP data coming in less than 30 seconds. Let me move that out of the way. That's part of ForexAnalytix. It's in the data flash. I got, live squawk here, which is nice, but I'm going to go over to the markets. Let's put in the dollar index to the far left. Let's put on a 15-minute chart. This is I wanted this to be the S&P. This over here will be yields. Let me find 10-year yields. Let's just put those up really quick. 10-year S&P, and here's data flash. Let me move that over here. You see the dollar index under pressure as ADP is about ready to come out. You guys announce it if you see it.
177.
Okay, a little weaker than expected. You can see the dollar's coming
weakening.
under a little bit of pressure.
Yeah.
Good enough.
But it's good enough, right?
Good enough. Yeah.
Yeah, I not horrible, but following yesterday's JOLTS data, you know, I think maybe people are a little bit more jumpy today versus what they would have been. And Dale, you know, when we were talking about how important the dollar index, where we're at, let me just show you. So this is the, you know, broken channel, right?
False breakout right now.
It's trying, and I think we're going to probably end up confirming it this week on non-farm if we do. But you can see we're below the, whoops, that's not what I wanted to move. I moved the wrong thing. You can see right here, we're below that double top breakdown point, but it's also a breakout point. Ascending trend line. Also, you can see it right here, right? That has been severed as of this morning. So the dollar index is under a little bit of pressure. I don't want to get too crazy, but I think if you're long dollars, you need to be a little defensive here. So anyway, that's just my thoughts on what we're seeing with the dollar. Now, we do have advanced GDP data coming, or preliminary, GDP data coming in about 14 minutes. We will be here covering it live before Rohit gets here. But now I can shut up for a minute and ask Ryan. Ryan, what are you thinking this morning when you got in front of the computer today and you started putting the puzzle pieces together in Europe? What is front and center on your mind?
Oh, it was what was I going to have for breakfast? Was my first thought.
Yeah, you know, aside from that.
Yeah, just it's watching that data, the ADP, see if there's a big, huge variation, get markets moving. There hasn't been. So yeah, we move on to the next data. GDP is the second number, the second reading. So might have a bit of a move around in the variation there, second estimate. So keep an eye on that one. But for me, I'm just watching the ranges. You know, it's a bit difficult to take one side or the other right this minute. So I'm managing the positions I've got, making sure they don't crap out on me any particular time, and just see what the data in the end of the month is going to take us.
How about the crappy? We were speaking of data, and we had Australia CPI came out last night. It came in weaker than expected, but it wasn't just the CPI. We had also some building data come out. Let me just grab all the. I was in front of the computer when it was all released, but let's
What's
just
the
make
weather
sure.
like there in Australia today?
It's cold. It's wintertime. It's winter. It's wintertime there. Remember, I tell you, one of the weirdest situations I ever been in is I was in Melbourne in the month of December. It was like early December, and I remember seeing like Santa Claus posters everywhere and sled and sleigh, and I'm sweating my ass off. It must have been at least 105 degrees there. It's like, this is the weirdest thing ever. Anyway, building approvals, work construction data came out, and then also CPI data came out last night out of Australia. So weak data in Australia. What do you make of it, Ryan?
Yeah, well, it's pretty much, according to the news wires, pretty much ruled out another hike from the RBA, or it's hanging by a thread, as one was quoting. So yeah, but you know, also China was supposed to cut mortgage rates yesterday or this morning, and that hasn't happened yet. But they're still talking about cutting mortgage rates, deposit rates by 10 to 25 pips. They've shut off interbank quoting, saying they can't, you know, banks and institutions can't quote now to the public. So, you know, there's little things still going on over there that make you wonder, are they closing up more than opening up?
Yeah. All right. Well, you know, it's strange because of all this, you know, the headlines around China and the weakness and, you know, economic weakness and blah, 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 blah. It is quite staggering to me that we haven't seen a much broader fiscal response from China thus far. I did an interview with Deer Point Macro yesterday. By the way, Dale, I need to hook you up with him. You're going to really enjoy interviewing him. I interviewed him yesterday, and we talked about China and BRICS. If you haven't had a chance to listen to
What's
that,
his name?
I can't tell you his name. He's an asset manager.
Anonymous. Okay, yeah.
He has to go under anonymous, and he doesn't show his face either. He does when you're off camera, but you know.
Okay.
Anyway, I want to. I'll introduce you to him. He's really knowledgeable guy in the FX space, especially in EM.
Cool.
But anyway, you know, I was talking to him about China yesterday, and I'm just really quite surprised. And I know we've been talking about it, how there's just has not been much response here. And how about the CNH, Ryan? What do you make of that? I mean, it's holding up really well. And by the way, Mandy says, yes, we do also celebrate Christmas in July. Hi, Mandy. Good to see you, by the way. What do you make
it's
of that?
not doing an awful lot at the moment. It's finding decent support down in that sort of 727s area. It can't get under 728 and hold it. So that's a bit of a signal, but the bounces are pretty weak at the moment. Doesn't look intent on heading to those highs, which means either everyone's finished offshoring or getting out of China, those who are buying dollars and getting rid of the yuan, or the market's happy with where it thinks the easing pattern's going to go. But this has been a case where the more they ease, it's not going to necessarily weaken the economy. It's going to add to risk. So they'll be seen as a risk-on move if they do ease, because they're actually acting to save things. So that's when you might see the yuan strengthen rather than weaken.
And if it breaks out, it's going to be a hell of a breakout, I think. And that's one of those scary things that if you start to see stocks like kind of, you know, I use the term go tits up, you could really see the CNH come under pressure. I think the dollar, this is where the dollar is going to really start to shine, is right through here, and you start to see a breakout. If that happens, I wouldn't want to get in the way of the dollar, I don't think. But
if that's China, would that be classed as a walk and handle pattern rather than a cup and handle?
Hey, that's racist, man.
What?
Just kidding. I don't know what it's just. You can see it's either wedging or, you know, wedging, cup and handle, whatever it is. That's a pretty big breakout point, I would say. Right.
Stop with those names, please. Because that is sexist. No wedging.
It's sexist. It's racist. It's woke. I don't know what it is. Hey, K-Man. I want to ask you. I want to ask you a question. We have a really interesting dynamic that played through the market yesterday. Weak data, stocks ripped. Now, I want to say it's probably had a little bit to do with positioning. You know, everybody was like all bearish, recession coming, stocks are over. You know, and in thin liquidity, it's, you know, you don't want to short a quiet market anyway, as it is. Anyway, S&P rallied yesterday with weak data. Do you read anything into that, or do you think that do you think that's going to be like a common thing today if we get some weak GDP data? Because you can even see right now we had weak ADP and S&P bounced a little bit. Do you think this is a thing?
No, I think there's several things. So first of all, you talk about positioning. Secondly, end of month was supposed to be a bit heavy for stocks, and then you have the market looking for that, and then you get a number which is playing into the hand of a pause, because what we saw yesterday on the yields is exactly rebalancing that power was looking for between supply and demand, and the people go like, hey, that's absolutely great for the Fed. Now they can pause or stop, and stocks fly. So that was what we've seen yesterday. Now we're and again, I'm going to repeat, I am not going to really have a big bias before I see the combination of all those data coming out this week, because you have The end of month, by the way, has been completely messed up with that stock move yesterday. It should have been like,
okay, man, I hate to interrupt right now, but I'm actually trying to find your comments in our chat room from yesterday where you said that. And this is the kind of stuff we talk about in the chat room, but I think it's important that you pointed it out. So I didn't want to interrupt, but I'm showing people what you were talking about yesterday.
Just a quick observation. Just, yep, there, stop.
Yep, right here.
Just above.
Oh,
no, just above.
there, right there, yeah. It is.
That was my thinking yesterday, because with this moving rally and bonds, I think the end of month signals got absolutely trashed, and so at best the end of month is now going to be messy. Yeah, so really, going in September, and people will have those seasonals in mind as well, but then they can get actually how shall I say, killed even before September really gets underway if we get like a very mild PCE and very mild, I'm not saying crapping the bed, but a very mild labor report on Friday, right? Then you're going to see like, oh, the September seasonals may be already out of the window. And that's going to be good enough. This combination, since those lows yesterday into Friday, is going to be good enough, in my opinion, to get a decent bias to start September.
I'd like to see a day with pretty good lower yields, maybe even a sharply lower day with yields, and the S&P unchanged. That's going to be the tell that the narrative shifts from lower rates being risk on to lower rates meaning weaker economy, and the stock market acting differently. It's kind of like the hook out there. Well, rates are coming down now, so we should be at all-time highs.
Yeah,
so
but
just something I'm thinking about.
Yeah, but because that's how the market traded the yields report yesterday, right? But the ones coming up, they can create the kind of situation that you're saying. If the labor report is bad on Friday, or you get a very weak PCE, and the labor report is bad on Friday, and you see a real uptick in the unemployment rate and wages just stabilizing or coming off just a little bit, which I don't think is possible right now because wages are going still up everywhere. But that is possible. That then you start to break below, what is it, on the 10s, below 408, 409, and have a visit of below 4%. That's all very possible, you know.
Yeah. All right. Well, thanks for breaking that down. And K-Man, great observation about especially end of month and in a very illiquid, environment too. So I think that's the thing that we got to be little nervous about as we head into month end. So appreciate it. And again, if you're not in the ForexAnalytix chat room, that was mentioned yesterday, late afternoon for me. So I know it was before K-Man headed to bed that he posted that. So we have about 2 minutes before the GDP data comes out. Ryan, any last minute thoughts here before the data comes out?
No, just look for a big variation in that GDP number, and just keep an eye on obviously the spending numbers and the sales numbers. Not so much the PCE, because I think we get the monthly numbers tomorrow, so they'll be more important.
All right, sounds good. And then, by the way, just in case you guys didn't see it, the S&P is flirting with the 4506 level. That was the level that we were looking at on the breakout yesterday in the S&P. So, we were looking for 4506, and we reached it. And you can see should put break above 4475, should put 4506, and we went to 4506 and some change, and now we're flirting with it. So now a break above that would really open up the door for some gains. Dale, last minute thoughts here?
Yes, get in the room. It pays better than Zoom.
Okay. Thanks, Dale.
And you can do, you can
K-Man.
do that via the NFP competition. The link's
Yes,
in the
yes,
chat.
and make sure we'll get K-Man's thoughts after the data comes out. But yes, if you guys haven't joined or taken a guess, make sure you guess for your NFP on Friday on the Twitter feed of ForexAnalytix, not on anybody else's. Just go on that post that ForexAnalytix posted, and then we give away 3 different months. So even if you're currently in the room, you can we give free months to people that are already ForexAnalytix subscribers. So happens all the time. All right, data should be out.
Bit weaker, bit weaker.
It is weaker. Trades balance.
2.1 apparently.
Yeah.
2% expecting 2.2, and the core PCE 3.7 expecting 3.8.
Well, you can see the dollar index coming down. S&P is moving higher. It's weak data, strong strong equities. That's what's happening. GDP data came in 0.2 versus 0.4 previous, and estimates were 2.4%.
Yeah.
K-Man, what do you make of all this?
We know that in Q3 Taylor Swift and Barbie will save the world, right?
That's right. We're gonna have Barbenheimer's box office gonna take care of all of us. All right. Well, data's out. Dollar is under pressure. Be careful, guys. With that, Dale, I wanted to. I guess I'm gonna pass it over to you because you have Rohit in here today.
I'm very interested in what he has to say.
Yeah, one of my favorite tech guys coming out. So let's.
Can you promote him for me, Blake? I can't get him to accept.
Yeah, let me see if I can do that right now.
All right, now it's happening.
Oh, it's happening. Okay. I want to say, K-Man, Ryan, thank you guys for being here. And Coach, always thank you for being here. And Steve, we didn't get a chance to hear from Steve. Steve, thanks for being here this morning.
Thanks, Steve.
Oh, there he is. Okay.
Thanks,
Sorry,
team.
running out of time.
Enjoyed batting the ball around with you. Thank you, K-Man, Ryan, Blake.
Cheers, all.
Steve. Thank you very much, Dream Team. So shatter our dreams, Rohit, and tell us what you're seeing. Are the markets going to feel a deflationary impulse from China? What's your work telling you, buddy? Oh, it's funny, huh? Okay, so let's let it rip, buddy. How are you? Welcome back.
I'm doing good. The Indian markets have been ripping away non-stop. So it's been a beautiful run as far as India is concerned. And we continue to have this rip on the back of a lot of bad news or fear. Let's say fear is the better word.
Okay.
And that gives us the feeling that we haven't reached exuberance yet. Despite what we might say are a lot of headwinds, but in terms of sentiment.
Well, hasn't there been a bit of a pullback in the Indian market with the rest of the globe? Can you share your screen as well? Right now, all I see is your name up there.
Yeah, I'll do that.
So we had about a 5% pullback in S&Ps. Didn't the Nifty have some type of pullback?
Very little. And
very
most
little.
of the pullback has been only in the main indices, So if I actually look at, say, the Nifty, now this is the Nifty daily chart. Okay, we've seen this small little pullback over 4 to 5 weeks. It looks deep, but it's actually not much. Yeah. What is really happening below the surface is that stocks are continuing to go up. And if we simply move to a mid cap or a small cap index, you'll see what I mean. Now you look at this and it's still making a new all-time high today. Even the small cap indices are doing that. So below the surface, the market is very strong. Okay.
How about the banks? Are they suffering under some fears of what's happening in China and what's happening in the US, or are they insulated, Indian banks, from
So Indian banks have seen a correction, which is
they look ugly.
Index. But it's not because of either China or US, because the Indian banks are mostly exposed only to the Indian business. They don't really have any global exposure. So there's no reason for them to
it looks like the XLF.
Yeah.
So
but
I mean,
if I go slightly longer term, it won't look like the XLF.
okay,
because US banking is under a lot of pressure. If I just look at often look at the Dow Jones Bank Index. Yeah. So if I look at this, it's way down from the highs of 2020.
Okay.
So all you're seen is a recovery from the March bottoms, which I do think is possibly a workable bottom. We probably see US banks do much better in the months ahead eventually. But
Okay.
Indian banks are holding up much more. I mean, they haven't really pulled back this much.
Okay, so you're still bullish. You're bullish everything. How about
I'm bullish
how-
everything. Yes, that's
how
fair.
about the dollar? Was that the end of the dollar rally?
I think it should be the end of the dollar rally. I have taken a parallel, channel around the setup. So this is the dollar index. It's almost breaking the short-term channel,
Okay.
and slightly broader. I've taken a parallel to the bottom. So if I draw a line of the bottoms, it just touched that. And on sentiment, we were at 90% bullish on the daily sentiment index or the DSI at the highs. And so that sort of sets us up for ending what may be a second wave or a B wave. I'm leaving that count open. But my sense is that once we are done here and we see the rollover, we have a long third wave to go. So I'm looking at it going all the way back to these lows eventually, 88,
Okay.
89 in the next, in the coming 6-8 months, maybe.
Okay. Are
That's what I
yields peaking in India like they are here?
Yields in India have actually already peaked months ago. So
Okay.
I'll just quickly move over to that chart. So this is the Indian bond yield down here. They peaked here with a triangular structure, somewhere in March, and from there they started to fall. So we're actually seeing the initial impulse waves. I would say this is wave 1 and wave 2, almost a 61% retracement. So when US yields start dropping again, I think we'll probably go into third wave down and go much lower on Indian yields.
Okay. So go ahead. Before I start asking you in machine gun fashion a bunch of questions, what did you plan to say to us this morning?
Yeah, so I've tried to put together some charts. Let's try and go over them. But one of them that is prominent, I think one of the things is just to think about this. I think we all know it. And the reason I highlight it, and I did so in my monthly long short report also, is because there's so much narrative, especially globally, that tries to compare what happened in 2000 or what happened in 2008 and try to use that as a context to what might happen right now or what is happening. And what I mean by that is, how will the bond yield, dollar, inflation, or rather recession trade really play out? If there is a recession, bond yields go down, stocks also go down, kind of narrative. And I think in the last time we also spoke, I showed charts of the 1980s to try and defunk that. Because when we are making these comparisons, are we comparing an inflationary period or a deflationary period? And the question you asked me right at the beginning, is it a deflationary bust? And according to me, starting from 2020, the post-COVID rally, we are actually in an inflationary bust, right? So rather, we should not even call it a bust, because equities tend to gain in an inflationary cycle if you can really manage through it. So we are going through periods of inflation. This probably been the first round. I don't know if there'll be a second or a third like you had in the 1940s, but that is a good model to keep in mind. And in that model, every time rates come down, the markets do tend to go up, till there's another inflationary peak.
When I brought up deflation, I was referring to China exporting their deflationary pulse to the world. Do you have any concerns about what's happening in China? They are a gorilla in the world economy.
So if I look at the wave structure of China, so I'll just come to that. I'll just show you a chart of the, why didn't it open? Yeah. Chart of the 1940s inflationary cycles. If people have not seen it, you had multiple spikes, one from here to here. You had another spike from here to here. So it came back to zero. You had another spike. It came all the way back to zero. You had another spike. What is important to understand is, did these periods really result in a stock market crash and a recession? The answer is a mild recession or some kind of a recession, yes. A stock market crash, no, but a consolidation. So if I actually go back now and look at this, this is like the mid 1940s, then it's again late 40s, and then you have mid 50s, right? So what did equities in general end up doing during that entire time period? So I'm just going to open the chart of the Dow, as that has most of the history. Maybe I'll take a white chart so that shows much more clearly. Yeah. So what we are really referring to is this period all the way back. And we are talking about this 1940s, mid 1940s, late 1940s. We're talking about somewhere around a bit of it here and bit of it here. Each of these inflationary, spikes led to a correction. And once the inflationary period was over, you had another boom, had another correction, you had another boom, and you had another correction. This was also a period coming out from the bottom of World War II, and the debt to GDP ratio would have been very high, and it continued to unwind as you inflated the equity, inflated the economy. So are we really doing something similar, which is what MMT and everything was, all about? So why aren't we making this as our comparison instead of 2000 and 2008, which were actually deflationary periods? So that is my whole argument. And so I sense that once we end this inflationary spiral, we're actually going to see a bond and equity market rally simultaneously, rather than bonds going up and equities going down, which has become the general narrative across hedge funds. And
I don't know
think-
why, because that certainly didn't work in 2022. In fact, the bonds led the market lower. So
Yes.
will the bonds just rally in sympathy with the market, or will they lead the market higher?
Yeah, so far equities are leading because they are higher than the bond market.
Right.
The bond market is somewhere in the fifth. I have charts of that, but since so before I go to that chart, I'll just jump to China. Since that's what you just mentioned, and I'll take the China A50 index. Okay, so for that, I will just go to my Asia. See, on the China A50 index or on the Hang Seng, which is the Hong Kong index, what we see is a very, very clear 5-wave advance from the bottom last year, where the post-COVID lockdown rally started in China.
Right.
This is very important from an Elliott wave perspective, because when you see a 5-wave advance and then I mark that as wave 1, what you expect psychologically is that during wave 2, sentiment, and this is as per what Elliott wave principle mentions on psychology, sentiment in wave 2 is often as bad or worse than it was at the bottom. And that is exactly what you're seeing right now. People are talking of the end of China. And when my brother in the US called me up, said, I'm hearing people saying that, it's over. I'm saying, good, then buy Chinese stocks. Because we are at the end of wave 2. It may not yet look like that, but the wave structure suggests that a third wave will come, and that will sort of surprise everybody on the upside. So I don't see China going into a deflationary bust. I think they're just getting started. They're waiting. In fact, they're doing something which the US didn't do. They're not overstimulating. So in that sense, they're not allowing the inflation problem to spiral out of control. In fact, in India also, we managed to stimulate less, and therefore our inflation rates are actually much lower than what we've seen around the world. This is a chart of the inflation data for India.
So that India and China doesn't need the bazookas that Western economies have used.
I mean, we need some of it, and we are doing some of it. For example, India expanded its capex government spending on capital goods by 30% in its annual budget for 2023-24, which has sort of been supporting the markets this year, because a lot of demand got created. But they don't have an inflation problem to worry about while they're doing that expenditure. So that is the advantage. So China also has the advantage. Yeah.
What about food prices there, Rohit, in India?
Food prices in India have spiked right now, but that's a seasonal trend, because every monsoon, which is the rainy season in India, is pretty heavy. So during the rainy season, you don't really get new produce. Every year there's a spike in food prices. So it's completely normal and it goes away. So it tends to be seasonal.
Okay, because it's not seasonal here.
That's right.
Okay, so I'm wondering how it could be seasonal there. It's the same food.
Yeah, but India doesn't Indian prices for food don't really correlate with the rest of the world. So it has its own.
Why? Because they produce all their own and keep it and don't export it?
Yes. There are limitations on how much they can export. There are quotas. You can only export so much. Like right now, we've banned rice exports last month. They're also talking about limiting sugar exports recently. So there are always these control factors in terms of how much you can export or how much. And sometimes they will even allow imports when prices go up a lot. They just open up imports and then prices don't go up. So
you have even a more centrally planned government than the US. And I mean, no, really, I know that you've probably thought about it because you've been in the markets for a while before central planning.
Food is a very sensitive, politically sensitive area in India. So we are not able to exclude it and say, oh, well, we don't really bother about food and energy prices. In India, it's sensitive. If food and energy prices remain elevated, you lose the next election. So it's something you have to worry about.
Okay. You have a view on oil? Probably higher?
Yes, I think oil is done. Oil does start moving higher. So if I just move to the oil chart. And I like to use Brent. So very long, complex correction. Yeah. Again, this is a very beautiful chart because it's a perfect 5 waves up from 2020 to 2022. Okay, so we call that a long-term first wave. You had a long consolidation in the second wave, back to the previous fourth almost. And so I think this is now the first minor one, minor two happening. We should develop a third at some point of time. I don't mind if it spends more time in wave two. The more time it takes to do this, the less of an inflationary problem. But we will eventually go higher. We should cross $100 and be above that eventually.
Okay, here's an exception to your rule. Sentiment is not as negative crude here in 2 as it was in 1 at the bottom, because we had negative prices. Yeah, so there was a lot more. There are a lot of energy bulls talking $100 and stuff. They weren't doing that at the bottom of 1. Yeah. So see, there's exceptions to everything, isn't there? All the time.
Oh, of course.
All the time. Okay, so you like crude, and I would say that you're probably bullish everything but the dollar.
Yes, that is correct. The dollar is going to be in a bear market, which sort of reflates every asset class, commodities, currencies, commodities, equities, which sort of puts most currencies versus the dollar into a strengthening mode.
Okay. And
we see that more clearly in some versus the others.
Okay. What else is important to you at this stage going into, the summer trading season? We don't have the equinox for another 3 weeks.
Yeah. So this is another interesting chart. This is a ratio of US equities to Indian equities. So specifically tells us when you have a period of outperformance of India or emerging markets versus the US, India in specific, because of the ratio of the Sensex to the Dow. So the Sensex outperformed the Dow during 2002 to 2008. Again, this was a dollar bear market. So that's important to understand that this was a dollar bear market. And if we're getting another one, we're already seeing outperformance of the Sensex relative to the Dow since 2020. I do think this trend continues. So therefore, on a relative basis, you would probably want to be in India or emerging markets compared to the US, but US markets are also appearing to do well.
Is there a good ETF for India that people trade here in the States that you know of? I know there's EM for emerging markets.
Yeah, EM is non-Indian. There are, but I haven't looked at it.
Okay. Yeah. All right. So Do you favor India over some of the other emerging markets as the best pick?
Yeah.
Or-
This is another interesting outlook. This is the Sensex relative to inflation. And the idea of this is to tell us two things. One is that the probably deflationary period or corrective period or long consolidation is over. Okay, so I'm sort of saying that possibly winter coming to an end for the Indian market and starting a completely new phase where now equities are outperforming relative to inflation. So it makes a very clear bet that, well, if you have an inflation problem, you need to be in equities. That's the bet. It's not anti-equity.
Okay. Would gold and silver equities also be a place to be? Miners?
I would hope so, though the last decade has not been very rewarding to the equities compared to gold. I mean, gold prices have gone from $1,050 to almost $2,000, but we haven't really seen gold equities do that well, which is the only setback. But in general, you do expect gold and silver equities to do well along with precious metals. My view on precious metals, though, does remain positive, of course. So yes, some exposure, but whenever Indian equities tend to do very well, I do prefer to own the equities domestically than to expose myself to. So during this period when gold was picking up, I was actually interested in buying gold and silver miners. But right now, I'm more interested in owning Indian equities directly, which does include Indian metal companies. So there are miners in the copper, aluminium, and other space which are consumed both in industrial and other uses. So those are ones where I'm actually taking interest, is the metal producers in India.
Okay. Tom is asking for your look on S&Ps.
Yeah, so I can quickly go there. Where is it gone? Yeah. This is my count for the S&P so far. After it completed a complex correction in October, we've taken the first, second, and we're in the third wave. The recent correction is only a fourth within that third. So we have a fifth of third left, which should sort of get us towards 4750, 4850 in the coming 1 to 2 months. And then I'll look out for whether we can pause somewhere in this range, maybe near closer to the top end of the channel. Will we go through a longer pause in like a larger fourth wave is something that we look out for. But it may not be the end of the move.
Okay. And you want to, I guess, there's been some huge moves, outsized moves in Bitcoin. Is that correction to the downside over?
I think so. What we have sort of witnessed from the bottom of 23 is the first impulse. I've marked this as wave 1.
Okay.
This first impulse so far has retraced 38% and almost close to the previous bottom that it made earlier. So I think we sort of got a double bottom here. And we should start off into a third wave with the dollar fall. And Bitcoin, of course, inversely correlates with the dollar as well. The next hurdle, therefore, should be closer to 48,200, which is both a 61% retracement and this previous swing high. Both of them would coincide close to 48,200. So that's going to be the next level. The trend line of the highs, of course, is way above, something to think about as to whether we can eventually get to that level if we do develop a full-sized impulse on the way up.
Okay. You want to show your gold and silver? I saw it before you pulled this up, and we'll wrap with that. Great presentation, by the way. Okay, so 5 is up at 3,000.
That's right. That's
okay.
right. Five takes us to somewhere around 3,000, unless 5 extends, which we can't say as of now. But yeah, that's the minimum goal to look out for.
Silver targets.
Silver looking at going back to $50 in the third wave.
Okay. All right, and your website so that people can keep up with you, and especially people that want to follow India.
Yeah, so we do have two things going. One is, of course, you directly come to indiacharts.com, where I publish my work daily. I write a strategy note every month. We do a lot of videos to keep people up.
You
to date
need
on
a
the-
shave, man. You see that? You
Yeah.
need a shave before you look into your telescope. Anyway. Anyway, cute. All right.
And,
So go
yeah,
ahead.
so of course, with a specific focus on Indian markets, and do write about a lot of the global equities, gold, silver, etc. Based on Elliott wave analysis, sentiment, and momentum. That's the combination. And an outlook on macro, again with the help of charts, so bond yields and so on. We also have recently launched this software that people should try out. It's called Strike. People can find it on web.strike.money. Again, for Indian markets, all kinds of data, sentiment, positioning, what is the futures positioning, what is the, how prices are doing, fundamental data. So it's sort of a data analytics platform that people can use to study charts, study data points. For example, how many stocks are above the 200-day moving average within the Nifty 500 index, and you can quickly plot something like this for Indian equities and look at them. So this is something I would urge people to try out.
Okay, and I could say that I look forward to Rohit's work. A lot of people could be right, but I've seen Rohit change his mind, and actually is very open to when he's been wrong and had to reverse and change his mind. So that, to me, that transparency shows integrity and character. A lot of people are revisionists, but you know what? We're all wrong sometimes. So check Rohit out, buddy. I'll get a hold of you later on Twitter. Always appreciate your giving nature to come here and share your views, even though they're polar opposite to mine. Right.
Thank
And
you.
you've been more right than me. So anyway, thank you so much, Rohit. Appreciate it.
It's been a pleasure. Thank you.
All right, Joe is thanking you. People are thanking you, and good hunting in the fall. I'll talk to you later in the fall, early winter.
Surely.
Okay, Rohit Srivastava. And thank you very much, buddy. Have a good day. And everyone, you could join the team on the Morning Edge in 19 minutes. And have a good day, everyone. See you tomorrow. And don't just count your pit. Thank you, Sinatra. Count your blessings. Adios. Thanks again, Rohit.